say in your question, the trade receivable it should be sorry, the trade payable should be 31. But if you calculate this set, the credit set of trade receivable, you found that overall is not 1,040. 1,480 is 1,479, right? If you calculate it, you will find the trial balance is unbalanced. So it is because of a small mistake here. The account payable, it should be 32, okay? And to make this trial balance equal in both set, credit set and debit set. And the second small mistake in the question is that in the information 5, buildings are to be depreciated at 2% on cost and plant and equipment at 2%. It should be 20%, okay? I think it's some kind of typing error. It should be 20%. So the first, I think we need to adjust these two mistakes, and then we start to preparing two reports. And because to preparing the financial position, we need to know the net profit in this year. Therefore, we start from the income statement. And as I told to you in the first tutorial, I suggest that you preparing those tables by 3 columns. So we insert a table with 3 columns. And this is an income statement. Okay, this is income statement, and we start from revenue. How to find the revenue? We check the trial balance. It says that ordinary share, retained earning, blah, blah, blah. And here, revenue and purchases. But the problem for you is you don't know, some of you might don't know which set the revenue is and which set is purchases. Okay, you need to remember the equity will be read in the red set, which is credit set. I think to some of you's common sense, the assets should be read in the left set, right? But it's not, it's incorrect, okay? As for a company, the equity is something that you owned to the shareholders, and debt is something that you own to the debt owners, okay? Therefore, the revenue should be read in the credit set. And imagine that the increase of equity, like imagine all your revenue has been put in the bank as a form of cash, then 10 million increase of cash is lead by the 10 million increase of revenue, right? Like 0.805, right? So the balance, the trial balance is still equal. That is why the equity should be read in the credit set. Just remember it. Okay. So the first is how to get the correct revenue. It's in the credit set. The equity and revenue will be read in the credit set, and the expense of purchases will be read at the left set. This is very confusing, but you need to remember it. So 795 is the revenue, and then we deduct the cost of sale. The cost of sale is calculated by opening inventory. It is inventory at 1st January 2020, 35, right? And plus purchases, how much is it? 350. After that, we got the purchases and minus the closing inventory. Which given in the information here, the value of the company's inventory 31st December is 25 million. So minus it. We got the overall cost of inventory, cost of sale or cost of inventory. cost of inventory in this financial period is 360, right? But if you read the question, it tells you that in the information 9, purchases amounting to 8 million pounds had been incorrectly included in administrative expenses. Therefore, we should adjust the purchases here. We should adjust 8 million pounds ADG of incorrect. Okay, we need to adjust these purchases. Therefore, the cost of inventory should be +8 as well. Adjust. Okay. Therefore, the overall cost of inventory is 368, and the cost of sale here. Sorry. We read the profit set in another column so that we don't make mistake. And cost of sale is 368, okay? And using the revenue deduct cost of sale, we got the gross profit is by 700 minus 795 minus 368. So it's 427. And then we need to calculate the operational profit. Operational profit, right? By calculating the operational profit, we need to deduct administrative cost. Where it is. Administrative expenses and distribution expenses. Distribution expenses. And as information 2, the following are administrative expenses: depreciation of buildings, bad and doubtful debts. So they were all included in the administrative expenses. If they are not included, like imagine if this information didn't exist, then we write depreciation and bad debts. We write them separately, okay? So administrative expenses, we first calculate the depreciation in this year. It tells you that land and buildings at cost is 700 million pounds, and therefore we got the buildings worth 5 million pounds, right? Because overall 700 and land cost 200, buildings was 500 million. And it tells you that buildings are to be depreciated at 2% on cost. Okay, so the depreciation in this year is 500 times 0.02, 10 million pounds, right? That is the depreciation of building. It didn't tell you the depreciation rate of land, therefore we don't discuss it. And it tells you the plant and equipment 20% reducing balance method, and the initial price of plant and equipment 100 here, right? So 100 minus the previous depreciation. We got the remained value of plant and equipment, and times 0.2. This is a reducing balance method, right? We got the depreciation is equal to 80 times 0.2, 16 million pounds, okay? So the two depreciation first, 10 plus 16, that is two depreciations. And the next is administrative expenses. When you read the table, when you read the trial balance, it's 105 plus 105, but you need to minus 8 with information 9 that purchases amounting 8 million has been incorrectly included in administrative expenses. So minus 8 as adjustment of incorrect. Okay, and plus the bad and doubtful debts. The bad and doubtful debts. So the bad and doubtful debts, how to calculate them is that in the information 6, the directors consider that debt of 5 million will not be recovered. So that is bad debts. And that the provision for doubtful debts to be 5% of the remaining debts should be provided. Okay, remaining debts, you need to remember. And what is the overall debit? Overall debit is trade receivable, 85 million pounds here. Trade receivable is overall debit. So we calculate the provision of doubtful debts by using 85 minus 5. That is bad debts should be deducted in this time period. Okay, and the remaining trade receivable is 80 million pounds, and times 0.08. That is a provision for doubtful debts, and is equal to 80 times 0.05 is 4 million pounds. Okay, but but this 4 million pounds bad debts is not all generated in this financial period. Okay, when you read the trial balance, you see here provision for doubtful debts at 1st January 2020 has 3 million pounds. Therefore, there are 3 million doubtful debts are generated in the previous financial period. So the real cost is calculated by 4 minus 1. This is the increase of provision for doubtful debts. Okay. And do we have any other adjustment? Okay, and plus 5. Okay, 5 plus 4 minus 1. 5 is bad debt, and 4 minus 3 is the increase of doubtful debts. Therefore, it's a doubtful debts that's generated in this financial period. And then we need to adjust the prepayment and accrue, because administrative expenses is 105 minus 8. Okay, but we need to adjust the prepayment and accrues. Prepayment is something that should be deducted because it's not a cost in this year. So we minus 4 as adjustment of prepayment, and minus 3. Sorry, plus 3. This is adjustment of accrues. After we made all those adjustments, we got the overall administrative expenses is first two item depreciation. 10 plus 16, and plus the real administrative cost is 105 minus 8, and minus 4 plus 3, and deduct the bad debt and provision for doubtful debts, plus 5 plus 1. So it's 128, right? Then is distribution expenses. It tells you that distribution cost is 85 million pounds, so 85, but you need to adjust them by the prepayment and accrues. So distribution expenses 85, the initial distribution expenses, and minus prepayment, because prepayment can be regarded of a part of your assets. It's not a cost in this time period. So minus 2 million and plus accrues 5 million. So it's equal to 88 million pounds. Therefore, the overall cost for administrative expenses and distribution expenses, 128 minus 88 is 216 million pounds. Operational cost. Then we use gross profit minus administrative expenses and distribution expenses. We got operational profit is 427 minus 128 minus 88 is equals to 211 million pounds. This is operational profits. And next we need to calculate the profit before taxation. Profit before taxation. By calculating that, we need to deduct the financial cost. Okay, what is the financial cost? We first found their liabilities. There are two information discussing liability. The first is here, 10% debenture 2025, and the value is 240 million pounds. Another information is here. Information 7, interest on the 10% debenture 2025 for the second half year is outstanding. That means this interest haven't been paid yet, but it can be regarded as accrue. Okay, this interest can be regarded as some kind of accrue. Okay, you didn't pay the cash yet, but you need to pay, and this part has already been concerned as a financial cost in this financial period, okay, by the accrual principle, accounting principle, okay. So when we're calculating the financial cost, we're directly using the annually interest rate 10% times the overall value of liability 240, so it's equal to 24 million pounds. And we got the profit before taxation is 211 minus 24 is equal to 187 million pounds. And then we deduct the taxation. And then finally we got net profit, right? And taxation is given in the information directly. The corporate tax liability for the year ended 31st December is 40 million pounds, okay? And you need to know this is tax liability. It didn't been paid yet. Later we will use this information. So taxation 40, and we got the overall net profits is 147. So this is the correct answer of income statement. I think the hardest part is how to prepare the administrative expenses, okay? You need first calculate, as they told you, calculate the depreciation, calculate the bad and doubtful debts. Bad debts 5 million, and doubtful debts is most, I think most of you are most easier to make mistakes, because many of you might concern the provision for doubtful debts as doubtful debts, but it's not. The cost in this financial period is the increase of provision account. Okay, you must remember the cost is equal to the increase of provision account. So you need to use the opening. So you need to use the closing provision minus the opening provision. Okay, and adjust the prepayment and accruals. So that is all for the income statement. And after we got the net profit, we start to prepare the balance sheet. Same as suggested to you, better to prepare a table with 3 columns, so we are less likely to make mistakes. Okay, and we write them separately here: equity and asset, current assets. This is a structure, okay? Current asset, non-current asset, and liabilities, current liability, and non-current liability. So, as I suggested to you, when you're preparing the balance sheet, you first finish the structure. Okay, you write assets, current assets, non-current assets, liability, current, non-current, and equity. You write those structure in the table first. Then you fill this table by each item, okay? So that less likely to forget anything or make any mistake. Then we fill this table. First is ordinary 15 pounds shares and worth 230 million pounds. So this should be included in where? This should be included in equity, right? Equity, ordinary shares. Ordinary shares. And the overall value is 230. Am I right? And then retained earnings. But this is retained earnings at 1st January. So this is opening retained earnings. We need to calculate the closing retained earnings. Closing retained earnings is equal to the opening retained earning plus a net profit. 147 net profit plus net profit, right? And minus the dividend paid in this time period. And how much is the dividend? Dividend is told you in the information 8. The directors have announced. First, you need to know it's announced. Okay, it haven't been paid yet. It announced an ordinary dividend for 5 pounds per share. So, how many shares we have? The ordinary shares worth 15 pounds per share, and overall value is 230. So shares outstanding. It's using 230. That is overall market value divided by stock price 0.5. So the overall outstanding stocks are 460, and dividend. 460, and dividend is equals to 460 times 5 pounds per share, right? So it's 0.05. 0.05 is equals to 460 times 0.05 is 23 million pounds.
Excuse me, could you explain? Could you explain one more time about outstanding shares? What does it mean and how you calculated it?
Outstanding share means the amount of shares in the amount of trading the trading shares in the stock market, like how many shares can be traded in the stock market. So we call it shares outstanding. This is the kind of how many shares can be traded, and we calculate them very simple by the market value of the company divided by the stock price. Okay, imagine that the market value of company is 5 million pounds. Okay, 5 million pounds, and this is market value, and stock price P is equal to 10 pounds per share. 10 pounds per share. So how many shares should be in the market? It's using 500 million divided by 10 pounds is equal to 50 million shares. Okay, we call this N. We call this number of shares by shares outstanding. It's just its name. Okay.
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 Yes. And where did you find 460?
460 is by
calculating. Oh no, I'm sorry. 230.
It's by here. See, ordinary 15 pence shares. So ordinary 15 pence shares means that when the IPO, during the IPO, each stock are sold by 50 pence, and the overall value is 230. So the ordinary stock value is 230, and divided by the IPO stock price 50 pence. So we got the shares outstanding. Okay.
Yes, thank you. I now understand. Thank you.
Okay. And now we got the overall dividend is using the number of stocks times the dividend paid for each stock. 0.05 is 23. And we got dividend is 23 million. But you need to remember, we didn't finish this information yet, because it tells you that the directors have announced an ordinary dividend of 5 pence per share. Announced means that you haven't paid the dividend yet. The dividend is still in your company's account. So we should write in the current liability 23 million because you haven't paid it yet. Okay. Then we finish this information and then we keep reading here. Land and buildings at cost 700. So land and buildings. If in trial balance, land and buildings are read together, then we write them together in the balance sheet. Okay, land and buildings. So the initial price is 700 million pounds, and minus the previous depreciation, buildings at 1st January 2020, minus the previous depreciation and minus the depreciation generated in this financial period. We have just calculated it. We have just calculated it's 10 million pounds. Okay, here. Land have no depreciation, only buildings generate depreciation. So minus 10. And the net value of land and buildings is 620. Is that okay? And the next one is plant and equipment. Plant and equipment is non-current assets, and the initial value is 100 minus the depreciation, the previous depreciation 20 minus the depreciation generated in this financial period 16. So the remaining value of the plant and equipment is 100 minus 20 minus 16 is equal to 64 million pounds. I keep reading trial balance. It's a provision for depreciation, and we have calculated and revenue and purchases. So purchases is a part of increased inventory, so it's current assets, right? And inventory is calculated by the opening inventory. Oh, sorry, it's closing inventory. We directly copy the closing inventory here, 25 million. And the purchases is a cost. We don't count them in the balance sheet because balance sheet is assets, liability, and equity. Purchases is none of them, so we don't discuss. Inventory here is a closing inventory, 25 million pounds. And keep reading, revenue and purchases, 10% debenture. So 10% debenture is a long-term, non-current liability, right? Because it's due date. Its due date is 2025, 5 years later. So it's long-term debt, and the value is 240. Okay, and the next one, provision for doubtful debt. So we need to deduct the doubtful debt. Doubtful debt is deducted in the trade receivable and payable. Trade receivable is kind of your assets, current assets, but your current assets should not be trade receivable. It should be net receivable. Net receivable is calculated by trade receivable 85 minus bad debts minus the provision for doubtful debts 4. Okay, we have calculated the account for the doubtful debts. So the net receivable is 76, and the net payable is 32. Okay, in your question you might write this figure as 31. It's still correct. I read 32 because I have adjusted this item. In your question, it should be 31. It's both correct, okay? And so debenture interest rate paid. In the information 7, it tells you that interest on the 10% debenture 2025 for the second half year is outstanding. So that means that you haven't paid the interest of the last half a year yet. So it's also another part of your liability interest. This is unpaid interest, unpaid. The interest should be regarded as a kind of cost, but the unpaid interest is like prepayment or it's like accrual. It should be read in the balance sheet. and unpaid interest is 240 times 0.05 because only half a year left it, and it's equal to 12. It's equal to here debenture interest paid, and if it didn't give to you, you can directly calculate it by the 240 times 0.05. And I think we have considered all the information provided us in the trial balance yet, right? Oh, and bank. Don't forget this part. Bank. This can be read as bank or cash. Both are correct. Bank. 8 million pounds. Then we read the information carefully. The value of company inventory we have discussed. Following administrative expenses we have discussed. At 31st December 2020, there were the following accruals and prepayment. So we didn't consider the prepayment and accrued yet. So prepayment is current assets. Prepayment. Prepayment is calculated by 2 plus 4 is 6, right? And accrues a liability and is current liability. So it's calculated by 5 plus 3. Okay, it's equal to 8. And we keep read. The corporate tax liability for the year is 40 million. So the tax haven't been paid. Same with the interest. So the tax liability, or you can directly write it as tax. Tax 40. And what's next? Buildings depreciation cost. We have count. The directly considered debt. Blah blah blah. Bad. So this is bad debt. We have already deduct them in the net receivable, and interest we have count. Director have announced ordinary dividend 5 pounds per share. We have considered, and we also considered this is only announced. So we have count them in the liability. Purchases accounting 8 million. This is a cost. It shouldn't be it shouldn't be considered in the balance sheet. So I think this table is all. Then we calculate, then we summarize all the items. So the item for current assets is 25 plus 76 plus 8 plus 6 is equal to 115. Okay. This is not the appropriate way. We should write it in below all the sub item. And non-current assets is equal to 620 plus 64 is equal to 684. And we got the total assets. The total assets is equal to sum of current and non-current assets, 115 plus 684 is equal to 799. This is total assets. And then we discuss the liability. The current liability is equal to 23 plus 32 plus 12 plus 8 plus 40 is 115. Sorry, 115. And non-current liability is 240. So 240, and the total liability is 355. This is total liability. And total equity is 230 plus the retained earnings 90 plus 147 minus 23, 444 million pounds. So after you finished the balance sheet, you need to check it, and you remember the formula we have discussed in the, I think, first or second tutorial. Is assets equal to equity plus debt. Okay, so asset in our balance sheet is 799, and we say if the equity plus debt is equal to this figure, equity is 444 and debt is 355. So we saw that the sum rise of equity and debts is equal to the assets. That means our financial position, the calculation of our balance sheet is correct. Okay, we're using this formula to check if we miss any item or if we forgot any item. So that is all to how to preparing the financial report. Do you have any problems? Anyone guess? Any question? So, yeah, please. No. This column is not debit column. This two column is not credit or debt. Okay, this column is just to avoid mistake. In your textbook, you could write them together here. Like you could write them like 115 here and give them this is I don't know how to say underline or something. Give it underline or double underline. You can write it in the one column, but I really suggest that you write them separately. Okay, and this column didn't means credit or debit. This column is just means aggregate figure, and this is a sub item figure. Okay, like inventory 25, net receivable, blah blah. This is a value of sub item, and this 115 is an overall item. So to write them separately can avoid that to count them twice. Like imagine if you write 115 here, while you're calculating the overall asset, you might summarize them together. Okay, you might summarize current asset twice. That means basically you summarize asset twice. So very easy to make mistake. And write two column or one column is depend on you. Okay. Don't worry. Any other question?
Could you share again income statement calculation?
How to you mean the net profit?
No, income statement calculation.
The calculation of income statement.
Yeah.
You mean this table basically?
No, just for calculation. It's next page, I think. Yeah.
Oh, you mean this?
Yes. Thank you.
Okay. I'm not sure that if it will be appeared in your suggested solutions. I think I really recommend you that just copy them. Okay, I write it for you. You can screenshot them because the suggested solution are prepared by your lecturer, and I don't want to edit it. It's I have to communicate with lecturer and to adjust she's prepare. So. I recommend you just copy them, and I will write this formula for you. Like cost of sale is opening inventory plus purchases 35. Okay, I write. So you can. So later when you want to learn it, you can compare this formula with the question. So opening inventory plus purchases minus closing inventory. Okay. Minus closing inventory is equal to the cost for inventory. Opening inventory is also plus, okay? And this is how to calculate the cost of sale. And actually, this is not how to calculate the cost of sale. This is calculate cost of inventory. Cost for material, or cost for inventory. Like in your questions, the cost of a sale is just the material cost, but in some company, like imagine you are a coal mining company, or you are like a production company, like you are making clothes. You are some company making clothes. then the salary for the workers are also a part of cost of sale. So you need to deduct both like material cost and the labor cost. Remember the labor cost is also a part of cost for sale. But here we only calculating the cost for inventory, and it's equal to opening plus purchases minus closing, and this is a straight line method. This is straight line method to calculate depreciation. This is straight line method to calculation depreciation. It's initial cost, initial value. It's initial value times the depreciation rate. 2%. And sometimes it didn't directly give you a depreciation rate. Like if I told you I bought a factory, and this factory and the lifespan of this factory is 100 years. So I don't directly give you the depreciation rate, but I told you this information, okay? The initial cost of the factory is 500 million pounds, and the lifespan of this factory is 100 years. Asking you to use the straight line method to discuss what is the depreciation of this factory. How do you calculate that? You calculate the depreciation rate. And the depreciation rate only in straight line methods. Only in straight line methods. Straight line methods is calculated by lifespan, 1 divided by lifespan. Okay, 1 divided by lifespan. If your lifespan is 100 years, then the depreciation rate for each year is 1%. And here, the depreciation rate 2% means that this asset can be used 50 years. Okay, and reducing balance method, straight line depreciation, and this is reducing balance depreciation. It's calculated by the initial cost minus previous depreciation. This is 20, and the initial cost is 100 minus the previous depreciation. We calculate it. This is by the remaining value. And reducing balance depreciation is using the remaining value times the reducing rate. Reducing rate. And in here, remaining value is 80. Reducing rate is 20%. So it's equal to 16 million pounds. Okay. And the last one is how to calculate the closing. It's called closing provision of doubtful debts. Doubtful debts. Okay, this is a closing. How to calculate the closing provision of doubtful debts is by using the accounts receivable. Accounts receivable minus bad debts. This bad debt is some bad debts that already confirmed. Okay. So this item is called like possible receivable or some kind of remaining receivable, something like that. And times this is kind of rate for bad debts. Bad debts rate. Okay. In this question, it is 5%. And this is a closing provision for doubtful debts. It's equal to how to calculate 85 minus 5. This is 85 minus bad debts 5 and times 0.05 is 4 million pounds. And another another information is like accounts receivable minus bad debts. Sorry. Sorry. And minus provision for doubtful debts. Doubtful debts is equal to the net receivable. Here is 76. Okay. Accounts receivable minus bad debts minus provision for doubtful debts is net receivable, and it appears in your assets net receivable. Okay, because based on the prudential rule, we need to prepare for the future bad debts, and basically we need to deduct decreasing the value of the account receivable. And another figure that very easy to mistake is the expense of provision doubtful debts. Is calculated by the opening provision divided by the opening. It should be closing minus closing provision. Is that provision? Provision, yeah. It should be closing provision minus opening provision is equal to the cost for bad debts. Cost for provision doubtful debts. Okay. Another tip you need to remember is doubtful debts is not equal to bad debts. Bad debts is something that you already confirmed, and doubtful debts is something that possibly will occur in the future. Okay, so that is all this formula. I recommend you just screenshot them, and later you can compare them with this question to learn it. Do you have any other question? And also this assets equal to equity plus debt. This formula is very, very simple, but it's very, very useful. Like every time when you finish the balance sheet, you need to use this formula to check if your balance sheet is balanced, okay? So that is all. Do you have any other question? Okay, then we discussing other two sub-questions. Identify two stakeholders in Morris PLC other than shareholders who would be interested in reading the company's income statement and statement of financial position. So this question is exactly as we have discussed in first tutorial, like the user of the financial reporting. We have discussed the internal user and the external user. The internal user included the managers, the employees, and who else? Like, okay, I think that is all. And also shareholders, okay? And the external users include the supplier, the customer, the NGO, non-government not negotiation, organization, non-government organization, and the government, because government need to count tax, NGO need to count like these companies' environment responsibility or social responsibility, like is this company treat their employee very good or not, or is this company make their like disabled pay the insurance for the disabled employee, something like that. And NGO like supplier, customer, and bank care about the debt, and like debt owner in the like bonds market, like in the bond market, and in the stock market, shareholder, and also government, they care about the tax, and many other stakeholders. You just select 2 of them and discuss why they need the financial reporting and what figures they care about most. So, and if you are not sure which figures they care about most, then you discuss the debt ratio. Everyone care about debt ratio. This means debt ratio can represent the company's future risk of default. So this is some figure that everyone care about. Okay. And sub-question C is identify and explain using examples 4 basic accounting conventions. So there are overall 6 accounting principles. Let me show you. Okay, this is not. I think I'll close this. Wait a minute. There are overall 6. Did you see this page? There are overall 6 accounting principles. And they are going concern, consistency, prudence, accrual, aggregation, and substance over form. There are overall 6, and you select 4 of them and discuss what is the difference in the accounting report with those principles or without. Like I discussed some of them with you. Like going concern. This assumes that the enterprise will continue in operational existence for the foreseeable future. Imagine that this company will default in the next year. Like in our balance sheet, the non-current asset, land and buildings was 620. This is because we assume this company will keep exist in the future. Like imagine this company will default next year. Because land and buildings, they are low liquidity assets. If we want to sell them in a short term, we need to calculate this 620 is a market value of land and building. But if the company are going to default next year, it will have a default value of those low liquidity assets. Like land and buildings might only worth 200 million or 300 million. Okay. This is because of those stuff are low liquidity. And imagine the account receivable. That means this is an account that you will receive in the future. But if the next year your company are going to default, you need to, like in real world, the company must securitizing the receivable and sell this securitized assets to the bank or to some like financial institutions. Okay, and at a discounted value. So the default value of assets are not equal to the market value of those assets. In the balance sheet are all market value. We write market value because of the principle of going concern. Like we assume this company will keep operating in the future. And accruals is that the revenue and costs are accrued. That is recognized as they are earned or incurred, not as money is received or paid. That is why we count prepayment as a kind of asset, and we count accrue as a kind of cost, although it's not being paid yet. And consistency means there should be consistency of accounting treatment like item with each accounting period and from one period to next. Like when we're calculating the depreciation, buildings are using straight line methods. We will keep using this method in the future financial report. Like if without this consistency principle, like we might depreciate building. Like last year we depreciate by the straight line method, and this year we depreciate by the reducing balance method. That will be very ridiculous and can't provide the substantial information to the users. So other prudence, substance over form, and aggregation is the same. You just explain those principles and give some example. This is an open question. Okay.
Excuse me.
Yeah, please.
Can I ask a question about depreciation?
Okay, please.
Could you please show us the balance sheet?
Okay.
Which we created.
This is balance sheet. Okay.
Yes, this one. And here we have that land and buildings were decreased by 70 and then by 10.
Yeah.
Due to depreciation.
Yeah.
But should we increase some reserve in liability, or I don't know, in other asset where we maybe...
Oh, you mean you want to increase the provision for depreciations in the liability, right?
Yes.
Provision is some kind of prepare, so it shouldn't be regarded as liability. Like when we're calculating the net receivable, we directly deduct the provision for doubtful debts instead of put the doubtful debts in the liability. Okay, so the first is you don't need to put them in the liability because the provision of doubtful debts and the provision for depreciation is regarded as some kind of cost or some kind of expense in this year. Like balance sheet only have three items: assets, liability, and equity. Cost is none of them. Like purchases is a cost, it's not being included in the balance sheet, and like labor, like wages paid to the workers is not included in the balance sheet. Like provision for doubtful debts is not. And assets depreciation is the same thing. Okay, so you don't need to put them in the liability. Liability is something that you owned to others, but the depreciation of assets is something that can be regarded as a cost. Like you bought a car. This car can only be used for 5 years. After 5 years, this car is like diminished, so it's a cost. Okay, it's not liability.
Okay, I understand it, but if we decrease an asset in order to achieve that liabilities and assets are equal, we need whether to decrease the liabilities or to increase another asset. And what is there?
Could you please pardon, like when you're doing what, you should increase or decrease?
I mean, you have a formula that asset is equal debt plus
equity here.
Equity, yes. And if we decrease any part of asset, we should whether decrease debt or we should increase other asset in order to...
Okay, I know. Because like when you think, if we didn't put the depreciation in the liability, it might make our balance sheet like unbalanced, right? Is that your problem? Like if I deduct like 220 here, then if we didn't write them in the liability, if the liability didn't deduct 10, then this balance sheet might not be balanced yet, might not be balanced. Here is the thing. Like if this land and buildings, let's imagine, okay, the initial question, this land and buildings only deduct 10 as depreciation. But if we assume this year it deducts 20, what will happen? What will happen is land and buildings deduct 20, then the liability actually remain the same. What changed is in the income statement, like when you're calculating administrative expenses, the first deduct of depreciation is 10. In the new scenario, it should be 20. And the administrative expenses will increase and 10 million, and all other value will decrease 10 million. And this is 8077, and the net profit will deduct 10 million because of the increase of depreciation. What will lead to the change in this table is that in equity part, the retained earnings, the initial scenario is 90 plus 147 net profit, and now it will become 137. So the overall retained earnings will be 434. Okay, so to answer your question, if more depreciation in the assets, you need to first consider, like in the income statement, which figure it have changed. Like in the depreciation, it will change the administrative expenses. Like if the inventory changed, it will change the sales cost of sale, right? And if bank, it increased $10 million, it will give you a reason, like why, how bank increased $10 million as cash, as a kind of previous bad debts. Those company paid the bad debts unacceptable, paid the bad debt or something, or is by a government subsidiary, or like first, like if the value of assets changed, you need to consider what is the reason lead to this change, and consider did they change the income statement, or is some kind of like policy change, and then make the adjustment of liability and equity. It's not confirmed. Like sometimes the increase of assets might because of increase of liability. Like your company borrowed money to buy a new factory, that is increase of liability, and sometimes it's of equity. Like your question, if the depreciation increased, then the net profit will decrease. So like here, because of assets decrease, and this balance sheet is still balanced. You need to consider it's not confirmed. Okay. So that is all for today. If you have questions, you can still send me the email. Thank you for coming today. That is all.
Thank you. Bye.
Thank you. Bye.